Join us right now for a breakdown of the latest moves in the tech sector, though. I want to bring in Joe Tigay. He's the Rational Equity Armor Fund and Catalyst Hedge Equity Fund portfolio manager. Good morning to you. It's been quite a wild ride, Joe, and tech is just, I mean, it continues apace, though I should say Intel's off a little bit this morning. How much more does this have to run, or does it?
Yeah, thank you for having me. It's a real thrill for me to be here. I can remember 20 years ago setting up computers for options market makers. As an options market maker clerk, I'd be watching this show. So 20 years on as a portfolio manager after a career as an options market maker in the VIX pit myself. It's a real thrill to be here. As for the market, that's the million-dollar question. A lot of people are saying, like your previous guest, is that this is a dot-com era bubble. We're seeing tech inflating. There's a lot of parallels to now and then. Of course, we're just in this technology boom. It's really exciting as just a person watching this all play out. So my parallel that I've been watching very closely, though, is in the 90s, we saw a Fed easing cycle. We saw easy money coming in. We saw liquidity driving asset prices higher. Remember, in 95, the Fed cut rates. This cycle actually started in 2024, the Fed cut rates. So we're in the middle of this Fed cutting cycle, and we're seeing asset prices rise, of course. Now, just because it's similar to 1999, it doesn't mean it's going to be exactly the same. So, yes, we do have potential room to the upside, but there's a lot of other variables, as you know.
So you look, though, at what's happening in this AI boom, and obviously it's helped a lot of tech, it's helped a lot of energy, it's helped the data center set, all of that, real estate, et cetera, et cetera. The question is, are we in a bubble? If we're in a bubble, what portion of the bubble are we in? And then the question, of course, is if we are, when would it pop?
Yeah, that's a great question. Asset prices are high historically. Maybe that's one way to measure a bubble. I think that would be my preferred way. You could also look at, the dollar and gold prices versus PE prices. And if you look at that, kind of in the middle of the range, too. So there is potential upside. Now, there's no set rule of how expensive stocks can get. There's no set rule of when they're gonna turn. So that's just the bottom line. For me, though, it's really going to come back to the economy. Last week's economic data, great news, strong GDP. We're seeing upgrades to the 2026 GDP. So for me, it's really going to come down to that big week, of course. For the economic news this week, we're going to get the jobs data. So the Fed, they've already told us they're going to cut 3 times. The Fed is saying we're going to have liquidity. We're seeing QE, maybe add some monetary stimulus too. So we're getting out there in terms of liquidity. If the economic data is strong, the market's going to continue and it's not going to trip up. Now, there are external factors that people can't predict, geopolitical concerns, tariffs out there, maybe even a government shutdown could trip things up. But for me, that's just a sign of there's going to be volatility while this market is inflating. And for me, I don't know, to your point, I don't know when this is going to end, right? And my preferred way to play this, of course, is long stocks, long volatility.
Long stocks, long volatility. Are there particular stocks you would play, and are there particular stocks you would not touch?
Particularly, I love the mega cap tech stocks. They are the hyperscalers. They have all the cash on hand. They really have the data. They know where this all is leading to. So they're doing all the research and development. They're building all of the infrastructure. They are ready for this when it happens. So of course, the mega cap tech is exactly where the AI is happening. And yeah, I think it's potentially that this AI boom could lift all areas. I'm really going to focus in on the tech sector, though. I think that's going to be the best winner over this period. Also very interested, though, you think maybe safety, you would think utilities, though. I think utilities have potential for the upside, too. We are going to need to power all these data centers, so that's maybe an area of overweight for me also.